Yo, what's going on, y'all? It's your man Rick the Dawn. But today, I'm just Ritchie Rich. Yo, welcome to this show. We take a look at penny stocks. Welcome. If this is your first time, before I do anything at all, you already know what it is. Thinking cap. There it is. Okay, it's official. I got a new one down the pike, and I want to check it out. First off, thank you for liking the video right now. Just do it right now before you forget. That's why I'm doing these more consistently, because of you. If you would like to listen to this episode, check out the Rick the Dawn podcast, available everywhere. And make sure you throw a nice little like on that as well, a little 5-star rating. I appreciate that. All right, here we go. So we'll be using Bloog Space for today. I'm going to go to the investing Bloog room. All right, and this one is pretty interesting, okay? Here's the stock here, TIO, Tingo Group Incorporated, and I'm gonna borrow that and drop that right here. And to be fair, we're gonna start off with a A+ rating, and we're gonna go through and figure out whether or not this is something we would like to invest in. All right, first things first, if you just wanna get in and get out, and you don't wanna watch the entire video, let's see what we got here. I'm a wave investor. I'm not sure if I created that term, but if I didn't, so be it. I feel like I did though. Look, it was at 91 cents. This was on December 19th. And then something amazing happened, and this thing climbed all the way up to $5. What? Okay. All right. I'm just going to follow along. And then if that wasn't crazy enough, it comes all the way back down. So somebody was juicing the crap out of this stock. I'm not sure if that's the right term, but it feels like the right term. But if we, ignore all of that and just focus on what we see, the data, this is a beautiful wave. The waves, the waters were calm, and then out of nowhere, the wind picked up and knocked this thing to oblivion. And then it came back down to, reality. Would I invest here? Based on this, oh man, it'd be hard not to. It's not a lot of spaces in which it drops below sea level. I like this little line right here. It's like sea level right there. It did drop to 73 cents at one point, but for the most part, this thing stays pretty consistent, and out of nowhere, it kind of explodes. And it's close to $1, which means that there won't be much issue there with regards to being delisted, I don't think. So yes, I would invest here based off preliminary looks. But you already know what it is. We have to look a lot closer at things, and let's do it right now. All right, folks, if we look at the market cap, 111 million. If we look at the revenue, almost $1 billion. Whoa. Okay. I'm very, very interested in knowing what's going on here. If we look at volume, 15 million transactions in a day. So definitely has the volume to make something happen. That might explain the $87 to $5 hike. All right. But if we look a little closer, because that's real pretty. It looks good. But we know when you look at the fine print, the details, that's where you find your meat and potatoes. All right, Tingo Group Incorporated is a holding company. The company is engaged in conducting financial technology business and agri-fintech business through its subsidiaries and entities. Located mainly in Africa, Southeast Asia, and the Middle East. Its segments include fintech, verticals, and technology. Online stock trading, comprehensive platform service, commodity trading platform and export, fintech payment services. So it's a lot of different entities under one umbrella. I like that. This is the technology sector, financial technology to be specific. Fintech. I like that. Financial technology. That makes sense. Infrastructure. Okay. Its online stock trading segment comprises the operation of Magpie, through which it operates in the online trading business located in. I love the fact that this company seems to be very, very spread out. And that might explain why it is bringing in revenue upwards or close to $1 billion in revenue. So I think they're so spread out. They're diversified in who they serve and what they do and what they offer. I like all of that. That's all good news in my personal opinion. That's just my personal opinion, though. We'll keep looking. All right, next, we're going to take a look at return on investment. It is a beautiful 25.33%. That is amazing for a penny stock. We don't see that a lot in the penny stock sector. A lot of times the return on investment is negative. So the fact they have a positive return on investment makes me still feel pretty optimistic about what I'm looking at. If we look at the PE ratio, the industry is 39.77, the company is 1.4. I like 25.0. So in both scenarios, I'm not quite happy there. I'm gonna drop that down to an A for the moment. All right, let's keep looking. Will it offer a dividend? Of course not. Of course not. Next, looking at the revenue versus the forecast. Man, how amazing is this? They brought in 851.25 million, whereas the forecast was 385 million. And with that being said, that means they absolutely destroyed their projections. And on that note, I'm going to do something I don't do often, which is go back to an A+. I love that. One thing I did not do is I didn't read this here. Tingo Group Incorporated reported earnings results for the first quarter, which ended on March 31st. For the first quarter, the company reported sales was 851.25 million compared to 9.56 million a year ago. Goodness gracious. This company made a lot of money. Anyway, net income was 176.74 million compared to net loss of 8.69 million a year ago. Man, this company is rolling in some money. Goodness gracious. All right. So, this company, for whatever reason, did very, very well recently. Very well. Okay. And that might explain that huge hype. Maybe some of that news came out, the reportings came out, and then people reacted to it, which was what skyrocketed the stock price from what we saw as 90 cents to $5 and some change. So that might be what it is. Now, if we look at this thing from a technical analysis standpoint or using technology, you can see that it's a strong sell on hourly trading, a strong sell on day trading, week trading, and monthly trading, with the small exception of a technical indicator which says it is a buy. Okay, but I would like to take a look here. This is where I'm going to really find out what I need to know, and that is by looking at the historical data over the last month. Okay, over the last month, the high is $5.69. That's just mind-boggling. The low is 86 cents, and it looks like it's in danger of breaking that low today because for whatever reason right now it is trading 26% below where it was trading. What was that on Friday? If you don't know what time I'm doing this whole review Monday, June 12th at 11:57 a.m. This is one of the few times I've actually did an episode while the stock market was open. So we're getting raw, real data right here. So I think it's going to break the low of 86 cents. I believe by the time the day closes, it'll be below 86 cents. And we'll find out why. Something happened. Something crazy happened. And the average is $3.22. All right. Let's dive in here. Okay. So for whatever reason, it went from $2 and it did an amazing job because on that day, it started the process of it getting to this point, which is about where it peaked, okay? $5.69. And then from there, if we take a look, you see a lot of red, okay? And this is the most crucial day where it goes from $2.50 to $1.30. So something in this area here happened, and it really happened, right? And then from there, we had, what was it trading at? It was trading at, it opened at $1.30 Friday, okay, June 9th. And then as of today, as of this moment, it's trading at about 86 cents. So, whoa, a lot of bad there. Okay, a lot of bad there. So my initial and preliminary pick was I would invest here, but I think something may skew that just a little bit after I find out more information. Next, I want to take a look at their website. And I do this just to get a basic sense of their professionalism, their presentation. It looks very, very simple. And I'm not sure if that's a good or bad thing yet. Okay, I'm not sure just, at this very moment. Okay, I like that they show their team, their executive team. I actually think that's pretty cool. I like that part. Okay, financial info, stock data, okay, governance, board of directors. I like that they are very transparent with this kind of stuff. And, this is a big boy company. This is not Facebook or a social media, it's not geared towards a younger audience. This is for people who want to make money. So, it's probably best if they keep all that fancy stuff out and kind of stick to their guns and just give you the information that you need. I like that they can be contacted. I like all this kind of stuff. But if I had to be honest, the website is just kind of a little on the dull side. And, that's just my personal opinion. Everybody has a different preference there. Keeping it moving. Next, we'll look at, stock splits to see if there's anything there. According to this source, there has been no stock splits. I like that. According to my secondary source, there was a stock split that took place on 2013 or in 2013, there was a 1-for-2 stock split. So good to know. And this is probably one of my best resources to find out what took place today. Okay. This is probably going to help us figure out what happened. Okay. If we look here, this news is not updated. Let's see if we can refresh this and possibly get something about today. Nothing about today yet. All right. Apparently, stockholders approved. Stockholder approval received for all proposals at Tingo special meeting. I would probably have to open this to find out more specifics. Tingo hires law firm to conduct independent review after Hindenburg's claims. Something tells me that Hindenburg's claims are some of the bigger reasons for some of the craziness that's taking place today. And something tells me, in addition, that those claims are very, very bad. And it is scaring investors away. That is about what I expect, okay? Something's telling me that's what the issue is. Okay, so I tried to stave off speculation, but let's look at this, okay? Tingo Group said on Thursday it hired a law firm, White & Case LLP, to conduct an independent review. That doesn't really help because anytime you have a company hiring their own attorney to do an independent review, obviously there's a issue there because that independent reviewer is certainly being paid by the person that's asking them to do the review. So there's a conflict of interest there. So you would need someone, a third party, to hire, quote unquote, the independent reviewer to do the whole situation, like the federal government or something like that, the state, something like that. But when the company itself does it, that doesn't really help at all. All right, I would like to know, if possible, if we could find out what the claims are. Like, what are the claims? Okay. Is there any information on that? Okay, here it is. Maybe so. The company is Hindenburg's fourth target this year. So this is deep, man. This is deep. I'm going to have to read this on my own time. And I'm only doing that to respect your time. But whatever the case might be, it's causing investors to flee in large numbers, and it must be very, very damaging. Okay. All right. Let's see here. A profitable and fast-growing fintech and agri-fintech company today announced the results of the proxy vote associated with the company special meeting. There was a special meeting apparently, and I'm just trying to figure out some of the basics. Approve all three of the resolutions presented in the definitive proxy statement. All right. See, as required under the terms of the acquisition of Tingo Mobile. So there's some kind of merger or something like that, and they had a vote on, what was going on. I would like to do one more thing, and again, I want to respect your time, but I'll be lying if I wasn't being completely upfront with you. I'm a little confused here. This is something pretty big, okay? I'm going to go down to the comment section because I did see something down here prior. And I'm hoping that maybe they can provide some information. All right, here we go. All right, the last report from law firm who hired an independent auditor to review short seller allegations that I recall. I can't read that right. I'm guessing that White & Case LLP will be looking for payment in advance. Exactly, right? They don't need a law firm. They need an audit. So something is funny with their numbers, their money, and that's what's causing investors to flee. And I'm going to go here because this might also provide us some information with what's going on. This came out on the 6th. So this is last week. All right. The report, which contains numerous errors of facts together with misleading and libellous content, appears to be a deliberate attempt to undermine the positive work that Tingo Group is undertaking across various worldwide markets. We know they're worldwide for sure. As disclosed by Hindenburg Research, the report represents their own opinion and is designed to benefit a short position taken by them. The plot thickens. So it seems like they're firing back. Tingo Group is firing back at Hindenburg, saying that their report is meant to improve their financial status as short sellers or shorts. These people, shorts, are people who bank on the company to fail and not do well. So apparently, Tingo Group is saying that their report actually serves them because it's pointing out all these things to tank the stock price and benefit the people who are making the accusations. Okay. Tingo Group confirms that it remains in compliance with the laws of the territories on which it operates and maintains the highest standards of corporate governance. All right. Sounds good, but that's not what we're seeing. So we'll see. That's pretty damaging, obviously. Even if Tingo Group is being completely forthcoming and honest, just having the report out there can be very damaging in general. Anyway, next we're going to go ahead and take a look at another resource of mine. And here we are. All right, this is marketscreener.com. Check it out. And if we go to ratings, it'll give us some information. Now, the thing about this resource is I'm not sure that they're tracking things real time. Like, this new information may not be here in this particular rating or report. Okay, the company has strong fundamentals. Yeah, up until today, right? All right, according to the strengths, according to sales estimates from analysts polled by, okay, the company is among the best with regard to growth. So this person or this particular strength points out that this company is, poised to grow. The company's earnings per share are expected to grow. Okay, a lot of growth talk here, All right, before interest, taxes, depreciation, and amortization, the company's margins are particularly high. Margins returned by the company are among the highest on the stock exchange list. Its core activity clears big profits. Sounds good. Weakness. The overall consensus opinion of analysts has deteriorated sharply over the past 4 months. Over the past 12 months, analysts' consensus has been significantly revised downwards. Let me tell you this. If this thing was up to date, it would have to report on what's taking place as of this very moment. But that probably won't show up here maybe until next week. So we have to take this with a grain of salt. I haven't done this, so let me do it now. The current rating, when you take into consideration that it's going through a lot of drama, and unfortunately some of that drama might be unfounded, meaning that it might be someone's evil deed to bring this company back down to earth for their own benefit. That could all very well be possible. But I'm going to go off of the rule of where there's smoke, there's fire. If somebody's making an accusation, there has to be grounds to make that accusation. So, they can't just come up with some unfounded report and just throw out lies, because then that can create another lawsuit against them. Like, you're damaging our business, our name, you're defaming us. And that's a lawsuit in itself. So someone felt confident enough to come out and say these things, which makes me want to go down to about a B- for the moment. All right. It drives me a little insane that I can't find a little bit more information about what's going on today, because even the reports we looked at, they came from June 9th and June 6th. So both of those reports are outdated as of this moment, but we'll continue to look. Let's keep finding some things here. Let's go to Cap Edge and take a look and see if we find anything worth talking about. Okay. Let me see here. All right. Nothing crazy. I'm gonna go back for just a moment. All right. Submission of matters to a vote. We know about the vote. We saw some things taking place with regards to the special meeting. So we know about that situation, the whole acquisition merger business. We know about all that. All right. We know about their first quarter financial results. We know about all that. The good news is there's no talk of delisting as of this moment, because we know it can get real bad real quick, depending on how investors react to this information. Next, we're going to look here. Trading at 99.1% below our estimate. Okay, that's a reward. Earnings are forecast to grow 105%. The thing about these resources is that I don't believe that they're updated as of this very moment. It's not real-time information. And that could be the deceptive part of what we're doing here. I'm going to go ahead and just do it now. I'm going to drop this down to a C+. I'm going to tell you why, because even if the news is not true, the fact that it's out there and it's affecting the stock price the way that it is, it might as well be true. It's like the equivalent of a guy or a lady going to school and someone making up a very, very nasty rumor about them. Whether it's true or not, the stain is there, and people will look at that person differently just because there will take an enormous amount of evidence and proof to clear Tingo Group's name. They've made a good first step, which is, doing the whole, the independent reviewer deal. But again, it looks a little suspicious because they're hiring the person to do it. So that won't clear their name. Okay. Even if the independent reviewer comes back with something positive, it's still going to feel it's going to be off. It won't feel authentic. All right. They need someone like the exchange itself to do the review or something to that effect. I think that's what it would take to really clear their name. And quite frankly, it's probably something there if someone, Hindenburg to be exact, feels as if there's something there. It might be something there. You know, I'm going to go with, I doubt they're squeaky clean in this situation. All right, they became profitable this year. We know that. Highly volatile, that could be a good thing or a bad thing depending on your investing style. They're saying that the shareholders have been diluted. Good. Now, here's a very interesting source, okay? We're going to go ahead and take a look at StockTwits because StockTwits will tell us exactly what's going on today. Because unlike those other resources, StockTwits updates in real time. And as you can see, since I've opened this page, we've had 20 reports or posts. So let's first take a look at what's been here for the whole time. Then I'll open up a new post. Okay, here we go. Now I know what Gomez meant when he said, just wait. So apparently there's been some chatter about what was going to take place with this company. And according to Pugdad, Gomez had already called it. I wish we could see that actual message that he pointed out. And speaking of pointing out, I just want to point out that if you would like to follow me on StockTwits, you know, my name is the Ray Charles. Feel free to holler at me right here, the Ray Charles right there. That way you know when I drop these videos. But let's keep looking here for just a moment. Pack of hyenas, these shorts, again. It's a lot of talk about shorts. And according to Tingo Group, or at least what they have stated, they believe that the shorts are the corporates behind this bad report and that they stand to benefit from it. And, you know, speaking of shorts, let's take a look and see what the shorts are saying. We're going to go here and look at the short percentage float. And that's a huge float. I mean, a short percentage, okay? That's a huge short percentage. 12% of investors are expecting this thing to drop. That's a huge number. And as of this moment, they stand corrected. Let me tell you what I think happened. And this is why you don't leave in the very first second of the video when I do these preliminary picks, because this is why you don't leave, all right? I think I have a basic understanding of what happened and what's going on with this company. And this might solve the great equation or issue. I think that the company was a middle of the pack type of company, doing okay, you know, dipping, come back up, dipping, coming back up, dipping, blah, blah, blah. Something took place around March 23rd, my birthday. Something took place on that day, and it caused the stock price to just explode. And when the stock price explode, a lot of people made a lot of money. However, the shorts were sitting on the side saying, we don't believe in this growth, and we're going to bet that this stock doesn't hold this $5 stock price. And let's take a moment of silence for the people who bought in at $5. Can we have a moment of silence for those people? Because their pockets are really, really sore right now, right? They jumped in at $5 expecting this company to continue to grow, and then reality struck, and the short struck, the Hindenburg report struck, and this thing just dropped and bottomed out. Okay, so that's what I think happened. The shorts were like a pack of hyenas chewing on this $5 stock price because they didn't believe in it. And here we are. Now it's right back to reality. So in hindsight, I wish I could make some adjustments and say I would not invest in this right now, because that report, and I think there's probably some foul play. Now that I think about it now, I'm updating as I'm talking. I think right now there's some incentive for the shorts to come out with the Hindenburg report. It just makes sense. It came out of nowhere. Why didn't that report come out sooner? Why does it come out now? That seems a little suspicious in my personal opinion. And I would argue that it's not 100% true, that report. And I haven't seen it. I'm just going off of my hunch. I would say off of a hunch, it would not be 100% true. I think it might be more like 75%, 70% true. But I think 30% of that is just capitalism at its worst, probably. All right, people wanting to benefit from someone's shortcomings. Now, if I go back and look around the time of March, that perhaps may give us some insight about what happened. So if we look here, we can see, look at all these beautiful days, man. Somebody made some money off this thing. All right, imagine getting in on this company when it's trading at 90 cents in maybe March of 2023, and then going on that humongous ride up to $5. Can you imagine how beautiful that was, right? And this is what we have here. Let's look at all the news that happened during that time frame. Planet Microcap Review magazine, so it had publicity, positive publicity in the magazine. That doesn't hurt. FinTech and agri-FinTech company report financial results. The financial results were amazing. We saw that. And according to Hindenburg report, you know, some of those numbers were fudged. They're not completely honest and true. That's what seems to be going on. It provides updates to stakeholders. It's always good to give updates to your stakeholders. Presents at the 19th annual, so it's good to present things. All right, so a lot of good stuff there. But the reality is things are not looking good right now. Okay, let's see here. I don't know which is worse, the fact I increased my total shares owned by 30% this morning, or that I feel nothing aside. Yeah, I have to agree. If you invested in this thing this morning, or I would even say as late as last week, right now you're hurting. So shout out to the investors who put their money into this. This is the very difficult part of investing, and this is why I have to always remind people I'm not your financial investor, because it's your money. You have to make your own call. I'm simply here to just cross notes with you. And if you have notes and know things that I don't know, head to the comment section right now and drop that in the comment section. Our community will really appreciate it. And if you would like to be a part of the community, just subscribe to the channel. I seem to drop these on every Monday. That seems to be the new date every Monday or so. All right. This person loaded up at 88 cents, was mid $5 last week. So this person seems to be thinking at this thing optimistically, saying, I'm going to get in at 88 cents because I think that it can possibly go back up to $5. And that's not a bad way to look at this. Okay, it was just $5 not long ago. Why not get in right now? It doesn't seem to drop below 80 cents, though it might now. It's possible. But you get in now with the hope that this thing can go back up to $5, even just $3, even $1, right? Anyway, the Hindenburg destroyed them with their short report, and it was a short report. Of course, who stands to benefit from something like that? The shorts. So this was well played by the shorts. Well played by the shorts. And maybe bad on the investors' part. They all sold out. They sold and left, right? Off of a scare tactic. My history with these is after the third round of beatdowns, almost always a significant melt up. So this person here, thank you, shout out to this person here. They're saying that I'm getting in now while all the fuss is going on and everybody's running for the hills, but things will correct itself. It may not go up to $5 again because maybe the damage has already been done. And, maybe the Hindenburg report suggests that it's not a $5 stock, fine. But maybe it'll go up to $2.50, and you have some money to make here, right? Right, exactly. All right, so I've seen about enough that I need to see from stock tweets. I think I know what's going on here. It's some craziness going on. So let's say you bought in with 5,000 shares. That's a very modest number. And let's say you got in at 88 cents on March 20th, 2023. And you saw this thing shoot up to $5.30. What would have been your numbers? Let's just take a look for fun. All right, so you would have paid $44,000 to get in. This is $44,000, $4,400 to get in, and then you would have made $22,000. So $4,400 would have turned into $22,000. That's a beautiful increase, man. And let's flip things just a bit and say that you got in when it was trading at $5, and this morning it's trading at about 85 cents. Okay, you would have spent. Let me see here. Did I do that right? I think I did it right. All right. Okay. So to get in, you would have, wait, is it not recognizing something or whatever? All right, let's try something else. Okay. So I don't know what I'm doing wrong. So the number of shares is 5,000 and your purchase price was $5. Thank you. Oh, wait, that's worse. Okay. So if you got in at $5, you bought 5,000 shares, you would have paid $25,000 to get in. And then if it's trading at 85 cents, which it basically is right now, you would have lost $20,000 in a few months. Man, that is the stock market in a nutshell. It is the most beautiful thing, but it also can be one of the worst things on the planet, depending on when you get in. All right, I'm going to drop this down to a C. I do think, I'm going to keep it a C+. Let me tell you why. Because I think the Hindenburg report, like I said, is 70% authentic, but 30% foul play. And I think because of that, there is still something to value here. All right. There's a lot of growth talk. I mean, we saw the stock go from 88 cents to $5. Like, come on, let's be realistic. That's insane, which means why not try that again? Why not get in right now at 85 cents, 80 cents? I mean, worst case scenario, this thing drops down to 76 cents. You lose a couple of dollars, you sell off, who cares, right? You get in right now at 80 cents and with the idea, I'm going to trade if it ever goes down to 70 cents and cut my losses, and I'm done. However, you get in at 80 cents and this thing goes upward to $1, $2, $5 again. man, that's the win right there. So I can't say that this is a D or a C minus or anything like that. I'm going to keep it a C plus because I think there is potential here to make money based on what happens moving forward. And the most important thing is there's no talk of stock splits. There's no talk of delisting, which means this is a very healthy stock. Asterisk. All right. Healthy stock because how well they've done over the last month. And it's really going to be very interesting to see what happens moving forward. If you are looking at this video here, sometime in July, sometime in September, throw me a comment and let me know what took place. Because a lot of times after I review a company, I kind of move on, don't look at it twice again, right? But this video will still be up. So if you see something that I might want to know, please let me know, okay? Because I'll take a look. But anyway, thank you for checking this out with me. Don't forget, you can support me by liking this video, subscribing to the channel, giving my podcast a 5-star rating if you enjoyed this at all. All right, but stay safe out there and be careful with this one. I'm not sure what's going to happen, but I'll see you in the next one. Peace.